The Genius Act, How Stablecoins Became Wall Street's New Playground. 1. Why this matters. If you have money in a bank account, this new law could shape what happens to it. The Genius Act, short for Guiding and Establishing National Innovation for U.S. Stablecoins, is now law. It sounds like progress, but underneath it's about control. Stablecoins will be issued only by Fed-approved banks and institutions. Translation? No new startups, no innovation, just big banks holding the keys. So what does that actually mean? Wall Street just got a monopoly on digital dollars. Footnote. The Genius Act restricts stablecoin issuance to approved institutions, centralizing power. 2. How the system works. Buy a stablecoin with your dollar. The issuer pockets your cash, then buys treasury bills with it. They earn interest, you earn nothing. Billions of dollars move this way, creating automatic buyers of U.S. debt. With $35 trillion in debt to sell, Washington loves it. For investors? It's déjà vu. The system mirrors money market funds, which froze during the 2008 crisis. Back then banks were bailed out. Will stablecoin holders get the same treatment? Don't count on it. Footnote. Stablecoins function like debt funds that benefit Washington while exposing holders to systemic risk. 3. The surveillance angle. Here's the part that should make you pause. Every stablecoin transaction will be monitored under the Bank Secrecy Act. That means anti-money laundering checks, source of funds questions, and worst of all, the power to freeze, seize, or burn your stablecoins at will. Add in Palantir's data systems, and you've got financial surveillance in real time. Biometric IDs tied to transactions. Permanent digital trails. So what does that actually mean? Your money isn't really yours anymore, it's permissioned. Footnote. Surveillance features allow authorities to freeze or erase stablecoins, undermining personal financial freedom. 4. Who wins and who loses? Winners? Big banks, the Treasury bond market, and Palantir shareholders. Losers? Small banks that can't issue stablecoins. Privacy, because cash disappears. And everyday people, whose digital dollars can be frozen in a heartbeat. Test markets like Vietnam already showed the playbook, 86 million accounts frozen overnight for lack of biometrics. Canada froze protesters' accounts in 2022. If you think it can't happen here, history says otherwise. Footnote. The law strengthens incumbents while eroding privacy and sidelining smaller banks. 5. Protecting yourself. So what's the move? Diversify outside digital systems. Keep physical gold and silver. Real estate. Even some cash tucked away for emergencies. Bitcoin? Maybe, but expect regulation. Foreign assets and overseas bank accounts? Worth considering. Multiple residencies and jurisdictions? Smart insurance. So what does that actually mean? Don't keep all your wealth in one monitored, digital basket. The system may be designed for control, but you can design your own backup plan. Footnote. Practical defenses include diversification into physical assets, foreign holdings, and multiple jurisdictions. 6. The bottom line. The Genius Act isn't really about innovation. It's about money for Wall Street and control for Washington. Every stablecoin you hold is backed by government debt, and every transaction can be tracked. Expect more taxes, more monitoring, and less privacy. Vietnam's playbook shows what happens when the switch is flipped. The question is not if this spreads, but when. Footnote. The Act signals a shift toward centralized digital money, prioritizing Wall Street profits and state surveillance.